Alright, so this is this is our last session, and so I was going to ask you about that. How are you feeling?
I'm feeling pretty good.
How is how do you feel about trading?
I'm sorry?
So when I asked that question, I guess I refer to trading. So how do you feel about trading right now?
Well, I'm apprehensive, but I guess normal. I copied the trades from yesterday. I think they turned out okay. I think I'll accept one.
Gotcha.
And I've looked through the series where it looks like there's possibilities for pending trades coming up.
Yeah.
I'm assuming there are.
So let's look at another chart book. 240. This one's going to take a little bit to load, but so what I want to go through with you is to make sure that you understand because there's a really good example that I just did with a previous student in the AUD USD on the 240. What I want to do is I want to go back and look at that one, and the reason being it's going to take a second because it's still not responding. So it's just got to load up all those, and it takes a minute for those because those are all intraday charts. But it's fairly clear. There's some good steps in there, and we'll kind of go over that. But I need to give you the information. So in Slack, when you want to go to live, once you feel comfortable after coaching, you're going to submit an email to go live. There's a lot of information you're going to have to fill out to go live. So let's look at that. Where's Slack? Do you ever shut your computer down and restart it?
Well, I haven't. I shut it down several times.
Well, not closing the lid, but actually like closing out all of these applications and shutting it off, like shutting it down.
No, I've not done that.
Okay. So let's do that right now because these are acting up a little bit. Because I should have Slack be able to come up quickly, but it's not. Oh, there we go. Alright, let's just hang on to this then. So, up in here in Slack we have this information right here. So if you need to get a hold of the front office for any reason, you have that information.
Right.
To go live, down here towards the bottom, where is it? Right here. If you want to go live for your live account, this is the email that you need to send. You need to send an email to this stating that you're ready to go live. There's a bunch of stuff that you have to fill out, so it takes a little bit of time before you do go live. So if you're going to submit this, start to finish, you might get a live account within 2-3 weeks. So the sooner that this happens, the sooner you'll get that account going to go live. Another suggestion, talking to whoever brought you in, you can ask, be like, I want to submit to go live, but I don't think it's going to happen for a few weeks. But I don't want to be paying for the indicators if I'm not making anything on them since I finished my coaching. Is there any way that I could have a month or so of indicators? They'll help you out with that.
Okay.
Or they should, because they want to keep you as an ongoing subscriber versus, you know, get frustrated and then just be done. So,
Okay.
so that's something you can ask to help out in the next month or two, to see if to really buckle down and kind of take what we've been discussing and apply that, but also jump in with all these other coaches to kind of get an idea of how they're looking at the indicators. So for us, let's jump into AUD USD 240. Let's delete all this. Is this the 240? This is the 240. So let's hit erase all lines, hit enter, let's hit home. Here we are. So I'm just going to go through this, and we're going to take these trades. I don't know what's before this, so we're gonna start here. We're gonna let the trade run. We're starting back here. I don't know what's before this. I don't know if there was a high or whatnot. So we're just gonna be. Here's our point. We're gonna measure this from wherever it is to our next move to gain our first perspective. Oops, I need to click this on. And so this is something that you can go back and back test and play with. Again, first trade that we'd be looking at would be right here for our sell. And because I don't really know where I'm at, I don't know if I'm going to be going to higher highs or lower lows. I don't know that yet. I'm just assuming. So what I want to do is I want to zoom in quite a bit and hit home. So all I'm looking at are these candles right here. I don't want to go any farther out than what I'm seeing. Actually, let's hit end. Scroll over just a touch and lock this. Okay, so I've got some space over here that's now been locked, so I've got some fill space. So here's my sell. I'm looking at my sell, and again, I don't know if I'm going to go higher or I'm going to go lower, so I don't have any assumptions right now. I don't know if this is a higher high, but because I don't have any information from before here. So I zoom out, all the information that I have on this stops right there. So I don't have any more information. So I don't know if this is a higher high. It looks like it might be, but I don't know if there was a higher high than this. So I don't know. So we go up, we take our sell here. We're looking at retracement levels where we feel that the market's going to come down and bounce on, and we'll take the trade back up from there if it does go back up, if we gain confidence in that. Otherwise, we're going to move this, adjust this, and take the 23% as it turns back around. So here we go. We're moving. That's hit the 76.4%. So I'm just going to take the buy. It might go down to the 88. I don't know. But that is a level that I like to take buys at based upon retracing. And this is the assumption that we're going to be moving up. But 76.4 is generally where I like to take trades. At the end of this 4 hours, that's where we're at. Let's continue forward, because at this point, I'd be looking at closing out half of this trade. So I look at closing out half this trade right here. I put my stop loss for this right here. Let's change this right there. I'm going to cut it here. And I'm going to cut it here. So I'm going to right click, I'm going to move this. So that's 252. Now I'm going to go 62. So we're somewhere right here. I'm going to put my stop loss right there for this trade. So that represented. So that's my stop loss right there, which is nice. Because I've taken half my trade. So this represents half the trade being taken. There's my stop loss now. So if it comes back and kicks me out, oh well. But if it doesn't kick me out and it continues down, I still have a trade in to where then I get rid of this eventually as it comes down. For this, I'm looking at 123.6 as my actual stop loss on this one. So I'm going to right click on this guy. I'm going to, let's just change this to a dash. That's your stop loss. I'm going to copy and move. So I'm going to move it down to here. Here's my stop loss, 123.6. So this one coincides with this one coincides with that. So that's my stop loss for this guy. So now we're in our buy trade. We're going to look and see what happens from the market. It went down to the 88.2, so we didn't catch that one, but we're now moving back up, so we're now positive the next 4 hours. It came back and tapped the 76.4 again, testing it. So if we didn't get in here, and we didn't get in the next one, we could have gotten in here for three, which is 12 hours, 3 of these 4-hour candles. So we had 12 hours there. 16 hours we could have gotten in the 76.4. Here we have 20 hours we could have gotten the 76.4, and we had 2 different times where we came down to the 88.2 we could have gotten in. So there seems to be a line drawn here that the market's not wanting to go past, and here's been 20 hours of saying there's a line here, don't go past it. And it has multiple attempts, and it's been pulled back both those times. So I feel like this might be the time where it's going to turn and go back up. We land on the 61, we're just barely on it, so we'll see if we move up to the 50. It came back a little bit, reaching up to the 51st. Now we pushed up, we're above the 38. So now we're moving in the right direction. At this point, we can close this out or just let it close out at -1 pips. We're not going to make a ton on it right now, so it really doesn't matter if we just let it close itself out. So we're only going to make 7.8 pips. If it closes itself out, we have a very, very small loss instead of taking a very, very small win. So 7.8 pips is not the greatest win. It's not horrible, but I'd rather take a -1 pip loss than a 7.8 win when I'm trying to make my wins a lot larger than my losses. But to each their own. I'm just going to let this stop itself out where I have it at, because if it does turn around from here, I still have a trade active. Again, it's half of that size of trade as this one. So let's put some numbers to these. This trade right here is going to be a 0.2 trade, 0.2 lots. I'm going to hit OK. So this guy right there is 0.2 lots. This one right here is also going to be 0.2 lots, and we'll change the size of this, change the size of some of the buys if we do continue in upward direction. But let's just put, let me copy and move this one. This one's also 0.2 lots. This buy. And this cell right here is also 0.2 lots. So I closed out 0.2 of these lots here. So this represents I closed out 0.2, so I only have 0.1 left of that 0.2 cell. So whatever I'm moving up, I'm actually making more. So I have 0.1 in a sell, I got 0.2 in a buy. Now we're moving forward. So what I'm anticipating right now, because again this is a chess game, Richard, and what we want is we want to win this chess game, but in any good chess game we have to understand a few different things. One, we have to understand the rules of the game. And the rules of the market is it can go up, it can go down, it can go sideways. Can the market go backwards?
Yeah.
No. Just like a pawn, if you move a pawn forward, you really can't move it backwards. So there's certain rules to this chess game. We know that some of the patterns in the chess game are we get a higher low, like we have right here. So we can outline this. So right here we're looking at something to keep an eye on, which is a higher low. So we can type that in over here. Might be a higher low, higher. So we're going to hit OK. From here, it is a higher low. But I put in there might be because this can still turn around and create a lower low. So according from this, it is a higher low, so I'm fairly confident. I don't want to give it all the confidence in the world, so I'm putting that word might be in there. Might be a higher low. Right here, this grayed area. And so I'll put it right on this line. So we might have a higher low. So we're going to continue moving forward. Again, we have our stop loss down here. Do we want to move this stop loss up to a break-even point, or -1 pip? Because we are currently up. Oops. We're currently up a total of 52 pips. So is that enough for you to say, let's move our stop loss up to here to break even?
I don't think I'd move it all the way up.
So how far would you move this up right now as is?
I'd leave 2 levels.
Okay, 2 levels. So I'm going to right-click on this. I'm going to hit copy and move. And so you went from there to here. So now this one is just up a little bit further to there. So from here to here. And I'm going to draw this line from here to here and from here to here, representing that this moved up. Moved up because of the movement, because we're moving forward with more candles. So there we are. So now we can take a look at this. And again, this one we first actually had, let me adjust this. This one was first, oops. Let me copy and move this. This one was first up here. And then we moved it down. So this one we moved from here to here. And from here to here. Alright. So from there to there. So we've moved this one down as well. Because that's my ultimate stop loss, is the -23.6 or the 123.6. Based upon a movement from a low to a high or from a high to a low. So we've moved both of those stop losses. We're still right here. So now we're going to continue forward because nothing has happened. We have 2 trades in. This one's down here. We're going to lose 1 pip on this if it goes any further up. If it comes back around and kicks it out at 100%, we're out of that one. We're still in this one. Let's continue forward. So we're still in both these trades. All of this did was come back and test the 38.2. Didn't do anything more than that. Now we pushed off the 38.2, and now this one is gone. So we've closed this one out with 60.4 pips at half the size, and the other half we lost 1 pip. So we closed out 59.4 pips of profit from this trade, and we're still in this trade over here. So this trade, we're more than 60 pips up, but we feel like it's going to continue. So let's, because again, we know that the market has rules, just like a chess game, and those rules we need to understand. And so part of the patterns that we're understanding is, and part of chess is, you need to anticipate the other player's moves at least two to three moves ahead of that. Does that make sense?
Yeah.
So because we have a higher low, we expect the next move to go to a higher high. So what we are expecting is, let me throw another tool in here. I'm going to put it after the horizontal, let's just after the line tool. let's find the arrow tool. And let's hit OK. I'm going to hit on this one. I'm going to configure this one. Okay, I can't. There we go. Let's change. That's fine. Let's go down to this. Fixed arrowhead size. Alright, let's just use that and black. Oops. Let's do this one being red. Let's just do those three colors. Let's also do blue because it's so simple. Alright, so I'm going to use this arrow. What our expectations are is a higher high. From this we expect a higher low. Oops. I went over, sorry. We were back here. I think we were right there. So I expect a higher low and so on and so forth. So ABC, since we have a higher low assumption, we should see a higher high and then another higher low. So what we're trying to do is we're trying to anticipate the next moves in the market. We're trying to anticipate the other player of the game, the market itself. So let's leave that up here. Since we have a higher low, which is this right here, which is our assumption, we should see a higher high and then a higher low. So higher low, we move forward again. We have some downward pullback on this. It stays above the 50. Pushes above the 50, comes right back up to above the 50. Lots of sideways. And we get our higher high right there. So here we are. We have a wave 1, 2, and there's 3. So a smaller wave 1, 2, 3 up within that, trying to break above this 100. So right here is where I'm going to take this trade, this buy trade. I'm going to close out half of it right there. So I've got my buy trade all the way up here. We're going to close out half of it for 102 pips in 6 days, which is not bad. These guys right here, I'm expecting the higher high, the higher low. So I can erase these because they're a little bit further. So I got a higher low right here, another higher low, and so we're looking for that higher high than this, and we got it. Again, all you need is one candle to do that. You don't have to have any more than one candle to create the higher high in order for this to turn back around. So what I want to do is I want to take this, erase this drawing, and now I want to adjust it from here, oops, this retracement from this low to the new high above our previous high, which is right here. So from here to here. So there's our new move, and now we're looking at, okay, if this is the top, we're going to retrace down into this. If this is not the top, we'll continue moving this up. So let's continue forward. So we continue up, we still continue up, that turns around, so let's adjust this and see if that is 23%. It shouldn't be. So there we go, we just tapped 11.8. Let's continue. Continue to move up. Continue. Okay, this might be, we're getting close to 23%. Oops. So here we are, we're below the 11.8. Let's wait for the 23.6. We tapped it. There we are. So this is where I'd look at taking my sell trade. And again, the stop loss, I forgot to tell you, the stop loss on this one, we've moved from where it's at to that -1 pips because we've taken half of the trade off the table. So I don't need to worry about this one until I feel that it's something that, you know, if it continues to a higher high, I want it to, if I get a higher low, I want to go to a higher high. I want this to continue. So this one right here, we're going to adjust, oops. We're going to copy and move this one up to this -1 pip, which is right below that 76 where this trade was back here. So I go back a bit. It's right below this guy. Because I've taken half the trade off the table. The other half is still on there, but I have a 1 pip loss on it. So this can go all day long and I'm good. So we've got that. I want to also show that we have moved it from where it's at here to this location. So I'm just going to throw that on there. So I'm moving these up. Alright, as we continue forward, I have my sell trade. It was right here. So I'm looking at my sell trade. And my sell trade now is going to be a 0.2 or a 0.2 lot size. And now, since I have a higher low, I'm going to start taking my next buy trade as a 0.4. I'm going to enlarge that trade. 0.20 lots. All right. So I got a 0.20 lots. Again, my stop loss on this one is going to be, I'm going to duplicate one of these, copy and move it. It's going to be this 100 and, or the -23.6, right there. It's my stop loss for this. I got a 0.2 lots on this one. I only have 0.1 lots left of this guy because I closed out half the trade. So I have a little bit heavier to a sell than a buy. But as I move forward, I'm looking for where is the market going to stop and turn around. I've hit the 50% level. I've hit the 50% level again. I've hit it again. And now I've moved back up. Do we want to get out of this trade? Or do we want to leave it here and let it happen? Or do we want to take a buy here? What do we want to do? What's your thoughts, Richard?
I would probably yeah, that's a tough one.
It is.
I would probably
Because
you're going to want to take a buy trade here, so this probably ought to be closed.
Better close this? Is that what you're saying?
Yeah, I think that's what I'm saying.
Okay, so let's close this. Right there. Are we going to take a buy right here? Are we closing this sell and taking a buy?
That's what I said. Yeah.
Okay. Now, because we created a higher low, and we've created another higher low, do we want to take this for a larger size than 0.2 lots, or just leave it at 0.2 lots?
I'd leave it.
At 0.2?
Yeah.
Alright, so where's your stop loss on this one?
Two levels down.
Alright, so we're going to copy this guy and move it right here.
Yeah.
Do you want to be right on the line, or you want to be below that?
A little below it.
Do you want to go below these guys?
Yeah, probably below the red.
So right about there?
Yeah.
Okay. Alright, so here we are. Let's continue forward. What do you want to do right here? We're now negative on this for the 2 hours, for 2 candles in a row.
Well, I think you got to close that one.
So you want to close this or let the stop loss take its place?
Well, I think I'd close it and collect the pips.
But you're negative pips right now.
Oh, that's right. That's right, I'm below my entry, aren't I?
Yep, you're below.
No, then I guess I'd let it run.
Okay. Keep going.
Well, you're no better off than you were a minute ago, so.
Yep. Just keep letting it run.
Yeah.
And that would have kicked us out right there.
Picked it out right there.
Yep. So let's move forward just a little bit so we can kind of get more of a define what's going on, because we're not above the 0 or we're not below the 100, so we still are playing around in here. So let's move forward. Again, we have the 61 twice, post below the 61, reach down to the 88.2, now we're moving back up. We were really close to that right there. Let's put a line on it. Right on it. Let's see if we move back up. There we go. So if you notice on this, we had a 1, 2, 3 down. And then we had a 1, 2, 3 back up. So in this scenario, taking a buy here, and get rid of ourselves, we need to understand that sometimes we need to let these things do what they were intended to do. This one would have come up and we wouldn't have hit this even yet. We still would have been positive on this, even though it came all the way down and tapped the 88.2 once. But it was at the 76, and this is again where I look at taking my trades. This is where I would have put a pending buy trade, and I probably would have tiered it down to the 88.2. So this is where I would look at getting into a first trade, and the second trade would have activated right there. So I would have been in a trade right here. As soon as it came back up the next candle, I would have made back what I had lost on this 76 to the 88, and then up we've gone. And so again, I have a 1, 2, 3 down, even with a little 1, 2, 3, 4, 5 down, if you want to count all these little teeny things. But kind of a 1, 2, 3 down, and then a 1, 2, 3 back up. So again, we got our higher low because we were anticipating a higher low, and now we're looking for another higher high. So we, based upon what you and I were looking at, we did a lot of this in a fairly because these are 4 hours, so a day hasn't even gone past between that sell and that buy position. And if we looked at tiering these, we could have taken this sell, and we could have tiered it back at the 23%. We could have tiered it back at the 11%, and we would have been in both those positions clear up here, and then it would have been back into our favor and gone clear down over to here. So we could tier. We could just use the stop loss by itself. Again, which we haven't still gotten out of that. If we would have stayed in this, we would have gone as much as, on this trade right here, we would have been as much as 40 pips negative and as many as 73.9 pips positive. So almost twice as much as we went negative, we went positive. And then after that, that's when we started going back. So sometimes patience is what really pays off in these scenarios. but this is a good example. Because sometimes we'll create what we consider a lower high, but we're not breaking the full wave. Because we're looking to break this full wave. Because this is, I mean, everyone, oh, that's a 1, 2, 3, so why wouldn't you measure it from here up? Well, that's not the full wave. If I come back, oops. If I come back to here, and I'm looking at this, well, I measured from here to here, and everything that was within that measurement from here to here, all of this was retracement. And it wasn't until it broke above that that I actually came out of that. So this is where I got out of this wave. But this was the low of that wave. So here's the low, and only a few candles later to be the high. So there's the high. We still have a buy trade in from clear back here that we haven't gotten out of. Still active, even all the way, you know, even though it went upside down. Because remember, we put this at a -1 pip. Remember? That's where we moved this guy up. It's a -1 pip. It's still active. This didn't kick it out right here. We're still further down than that. That, you know, we were clear over here when we saw this. So that trade still is active, and that trade by itself is from there to there. We're up 146 pips in 19 days. And I already took 100 pips off of that trade to begin with, and now it's up another 50 or so from there. So we still have that trade in. It still is positive. We did a little bit too much of a get out of this too quickly, kind of a move, and so sometimes it's not bad to get out of this that fast because you got out of it quickly and you were taken by. But then we need to understand, okay, well, if we're taking it this close to each other, we need to start making sure that we do the retracement again. So if I erase this, it needs to be, that retracement should, if I've taken something this close, it should be from the bottom here, and I should move up. Here we are. I should have looked at taking a sell maybe right here, or looked at taking a sell after this one. Either way, that buy would have still been positive. Let's say we took the sell right here, because we thought we posted below the 23% right there. So even if we took the sell right there, and it still went against us, we got out of that buy at that sell. Here's our sell, it went against us, but then it goes in our favor. We still could have done well with that. But what we're really trying to look at is, do we get out of certain trades too quickly? Do we need to be patient? And this is where you going back and doing this exact same example, this exact same practice. Practicing this exact same kind of little exercise is going to be useful to you. Because again, our stop loss, our trade is based upon this. We took a sell here, we got out of it a little bit too early, created a lower high. If we would have left this guy be, this one would have been up 70-something pips. This one would have been kicked out if we would have left this one in right down here. But we got out of them a little bit too much. We've now created what we expected. We expected a higher low. We got the higher low, and we got a higher high. So after this point, this is where I would put, if I had any trade in here from the 76 or the 88, if I had a trade in here, this is where I'd close out half of that trade. So let's just make the assumption. So there is our assumption. So here's our assumption based upon this, which means we would have put 2 pending trades in. A buy right here and a buy right here, with this being tiered down.
Oh, okay. Because I was thinking that it got kicked out right
Yep, so
there.
tiers it
When I
down, and then this one again to our absolute 123.6. So one tier, we could have done multiple tiers all the way down. I'm just throwing this in just as a quick example. We could have tiered all the way down to that 123.6. So we got into a buy trade, we lost the buy trade right there, got into another buy trade, and we're clear down here, and this is where I would take my first, I'd close out part of that, I'd close out half that trade. So let's change this and place my buy trade right here. So this one's active. This one activated right up here, but we're going to change this one to yellow. That lets us know that we activated it, but it failed. It ultimately failed. And let's go width on this, just a fat one. Okay. So it did activate, but it failed because this one filled and closed, and that one got closed when this one was activated. So we're going to trade clear down here. This is where I close out half my trade, all the way up here, for 128 pips in 5 days. Let's see. But I still have half of this going. I still have the other half of this one back here going. So I can close out this one for 150 pips. I just close out this half of this one for 128 pips. And so what do I expect? I expect a higher high after this. We've got it. I only need one candle, and then I can turn around. So if this turns around, I'm looking at changing directions. So I'm going to look for the next 23%. So I'm going to erase this from back here. So let's erase that. Let's zoom out just a touch. So I have this information from before, because I still have this buy trade that I haven't closed out the other half of it. I still have this buy trade, I haven't closed out the other half of it. These ones, this one closed, and then this one closed as it came down, I think, to here. Or actually, no, we closed it out here when it hit the stop loss. So that one did hit the stop loss on this guy. So those two we've lost on. But again, I look at taking trades at 76.4, 88.2 with tiering it down. So there's only a single trade in. I close out half the trade once I reach above my my previous high. Made 128 pips in 5 days and 4 hours. I mean, I could have made about 100 pips right here in half that time, if not less. But we're still in the trade. I'm looking for the retracement, not of this right here, but of the larger wave. And we could probably look at both. It is very distinct. This is where I'm looking at my next wave. Here's my wave. What I'm looking for is this to come down. And so because we've had a 1, 2, 3, 4, and here's 5. So if this starts to come down and I hit the 23%, there we go, there's my sell. So this is probably where I'd get rid of the rest of this trade and this one back here. So this one is not a whole lot different than the 128 pips, which is fine. Or we could just leave it in if you wanted to leave it in. What would you like to do with these guys? Because this stop loss for this one isn't down here anymore. It's now been brought up. So let's copy and move. We had one down here.
Close it. Well.
So as soon as it starts to go up, we've already moved this up to this -1 pip.
Right.
So this guy. So we already have half of it closed. Got the other half remaining. The question is, what do you want to do with the other half?
Well, I'd close it. But
Alright, so you're going to close it. So we close this other half right here for about 130 pips. And then we want to close, well, let's reverse that. Let's change it down here so that it's not overlapping. So we close this one down here for about 130 pips. And we also, do you want to close this one back here as well?
Yeah.
Okay. So we close this one back here for 150.1 pips. And now what we're looking at is taking our sell trade. And how large do you want your sell trade to be?
How large?
Yeah, what's the lot size?
Well, why wouldn't we use 2 again?
We can. It's completely up to you. So here's the thing. If
I
you
don't know why you'd use something else since you started with 2. But
well, if we're continuing to grow the account, it makes sense to continue to grow the lot sizes. And the reason being, if you keep the lot sizes exactly the same, you have what's referred to as linear growth. If you keep the lot sizes growing as your account grows, you have what's called exponential growth.
so, well,
So-
I didn't consider anything bigger, so.
No, you're good. So we
You're
could do,
saying-
instead of 0.2, we could do 0.25 or 0.21, whatever you want to do. But we've increased the account because we've taken all these pips out of the account. 150 here, 132 there, 128 here. This one we made, I think, 50 or so on. Whatever it was. Let's just hit OK. So this is going to be 0.25 lots. So we're in our sell trade. So since we've reached to the very top of this, what I'm looking for now is so 2 scenarios. If this is the end, or 3 scenarios. This is the end of the run, because again it's a chess game and you have to anticipate the next 3 to 4 moves. If this is the end of the run, and we've gone to the very top of this, because we've had 5 waves up. If this is the end of the run, we have a few different options. We can create a higher low, so something higher than this, maybe higher than this, to a lower high, and then down to a lower low. So we're going to start moving down that way. Or we can skip all of that and go straight to a lower low, below this, and hopefully below this, to a lower high, and then back to a lower low. Or we create a higher low, back up to a higher high. So I've got 3 scenarios. So I've got the moves, I'm anticipating the moves ahead of schedule. Does that make sense?
Yeah.
So if I've anticipated these moves, I want to make sure that with these moves, I follow what's going on and react accordingly. Because I already anticipate 3 different scenarios. So let's move forward and see what we're doing with this cell. And that cell didn't last very long. It's probably going to kick us out here. Not quite. Okay. So now we need to adjust this to our new high up here. And so we would have taken a 23% right there. We're a little bit lower than it, but we're still fine. So we had a 1, 2, 3, 4, 5 up. And now we seem to be finished with this because we're having a lot stronger candles moving down than we had moving up. So we're still in a fine position. We still haven't gotten kicked out with that one up here. We're still where we're at. We're still going. So let's continue. We're doing good now. Again, I'm looking for what? I'm looking for a lower low, and it might be off of this, because we just did that right there. Lower low. I might have to push down a little bit harder to get through this lower low, and then I have another one down here. So this is a lot to get through, because it had so much time to build. So I don't think I'm going to get through all of those all at once. I'm going to create probably a higher low than this down here, but a lower low than these two. Well, at least this one for sure. But then I expect a lower high after this. So there's the move. right there. It's starting to turn back up, so this is us. So we can stay in this sell trade because we feel like we're still going to be moving down. Do you want to hang out in this sell trade because that's a decent spot to be at a stop loss?
No.
What do you want to do with this?
Close it.
You want to close the trade? Alright, so you made 11 pips on that one. Let's continue forward. And do we want to take, are you going to take a buy there then?
Actually, I think I probably wouldn't close it. I'd probably, I think that's probably coming back down.
Okay, so let's not do this. Alright, so you think it's going to come back down?
Yeah.
We're now to a lower low than this one right here. And this looks to be a lower high. Fair?
Yeah.
So do we keep going?
Yeah.
Now, do we create another lower low? Let's check this out. Right there, we just barely, a little bit, not much, it's not worth my... There we go. Now we have another lower low. So I'm looking at a wave 1, 2, 3, here's 4, and here comes 5. So after this, we're probably going to stop and turn back up a little bit maybe, for maybe 1, 2, 3 up or something. But we have our sell, we are moving down. I don't think we're going to break out of this huge thing, but if we post below this low right here, I'd probably close out half my trade, and that's just me personally. Well, significant. So what do you want to do right here?
Well,
Because it has a lot of momentum.
is that our stop loss or not? No.
No, that's the 88.2% level.
Okay.
So it's crossed over a 90% retracement of that upward move.
Well, that may turn around now. But we'll have to see another candle.
You want to see another candle?
Yeah.
So go ahead and hit the right arrow on your keyboard. We're now to a lower low than right down here. So all of this upward 1, 2, 3, 4, 5, we had a 1, 2, 3, 4, and 5. So all of that helped itself. But now, this is where I look at taking half of my trade. This is the conservative side of me saying, hey, I've posted below it. Usually, it's common not to get anything more than right there, so I'm going to take half my trade, bring my stop loss down, and bring down to about here. These guys are going to show that it moved down. So I've got 1 pip I'm going to lose on this. That's it. I brought it down. Here we are. Do you want to keep... what do you want to do next?
Well, you'd have to have one more candle, but I think turn around.
Okay, let's go forward. It's nothing huge yet. And if I'm looking at the retracement, so retracing back up, I'm going to draw this. Instead of drawing it clear up here, sometimes it's nice to draw it a little bit closer, especially with how large a move we had. That way we can get into a 23% a lot sooner than if it had this whole thing measured. But let's just use the whole thing just for, that's what we used. So go ahead and start. Let's go ahead.
I see what you do. If you got that big a move, then you try to change the Fibonacci so it's not as spread out.
Yep.
Okay.
So instead of the 23 being up here, it's now down here.
Down there, yeah.
So it's another 20 pips or so lower than this right here, because it was up here, right towards the bottom of this long candle, and now it's further down towards the middle of this candle. So either one is, neither is correct. They're just both information, and you can choose whichever one you want to use.
Okay.
I will tell you the downsides. If you choose the one that's further away, you get into a trade later, and you'd get out of your other trade later. If you choose one that's too close, you sometimes get into a trade too soon, and it turns back around, and you lose that trade. So sometimes there's trade-offs. There's cons to both sides.
Okay.
So let's go ahead and move forward. So it seems like we might be, playing around with the bottom. Let's see if this doesn't go any further down. So it went further down, so we're going to adjust that. Let's go a few more candles. Let's keep going. There it goes. Let's keep going. Okay, so now we see some green. Let's move this. Now we're seeing some upward moves. Let's keep going. Keep going. Back down to a new low. Awesome. Keep going. Keep going. Keep going. Wow. I like it. Keep it going. So this is something that would make you very happy, and so now I am very okay with moving it from clear up here to over here.
Yeah. Because
that much difference doesn't matter as much versus here instead of all the way down here. So look where the 23% is. It's right in between all of these versus the 23%. It's just a little bit higher right up there. So there's not a huge difference now. Does that make sense?
Yeah.
So it's not going to be a massive difference. So I like to have it just a touch closer. Oops. So I'm going to adjust this down to this lower area. All right. So now let's continue forward. So either we break below that 0% or we break above the 23% is our goal. So keep going. Down we went. Awesome. Okay. So that might be our low. Let's adjust it again once more. We've hit 11.8. Let's see where we're at. Keep going. We can keep going. There we go. So now we're looking at a buy.
Yeah.
And now we're looking at potentially closing out the rest of this one. So on this one, because again, sometimes it's like, hey, do I really want to get out of this? You were up as high as 268 pips. And we're only closing out 185. So we lost 80 pips in that whole upward move to that 23%. So sometimes when you're up, clear up here, sometimes it's like, you know what? Are you down that far and you see like, hey, this low right here, there's not much. It's really not that much lower. Does that make sense?
Yeah.
So here we're 159 pips. Here we're only 150 pips. So 9 pips from this low to the next low. That's not really much of a difference. That kind of tells me that it's starting to have a struggle going further down.
Yeah.
So this is where I'd kind of look at maybe are we going to be getting out of this trade or not down here? So instead of taking an 85 pip trade, we're looking at taking a 227 pip trade. So start thinking in senses of is the market really what is the market really doing? It's showing that it's slowing down. It's stopping, it's pulling back up, and it went just a little bit further, not much. We were waiting for the 23%, but it didn't give it to us, and we have it just a little bit lower of a low, and then it shot right back up. Looks like we're done. We can get out here, we can get out the next few candles. Here is where we ultimately would get out regardless. Or if this is our wave 1, we can just hang on to this and let it continue further down. We don't have to get rid of this if we don't want to, because it has a 1 pip stop. We can let it retrace all it wants to retrace, and we could still be in that trade if we wanted to, or we can get out of it. Your call.
Yeah. I get out of it and put a new one in, problem.
Bank the profits. Okay, so we got 185 pips. We have our buy right there. So now let's move forward, and what we're looking for is where are we going to retrace? Because we have a lower low. We expect a lower high. Where is that lower high going to be? And again, our stop loss on this one, we need to put that in real quick. Come on. Is this negative 23.6? Alright, so keep moving. So this is going a little bit sideways, and I'm not a big fan of what's happening because that could be my lower high. So if I get anything that posts below this, I'm going below the 0%. I'm going to close my trade, even though it's before that stop loss.
Well, there you hit it.
I tapped it. I need to post below it. I need a body below this level. There we go.
Okay.
I'm out. So this buy, we've taken an 88 pip loss on. All right.
Okay.
So we're not in a sell. We're not in a buy right now. Or do you want to take a sell right now? Because now we're reacting to the market instead of anticipating.
No, I don't want to do anything right now.
Okay. So we have no trade in. Let's just continue forward. We're back up. Now we're back down. Now we're kind of going sideways. Even for a 4 hour, this is kind of a lot of sideways here. So, let me pause real quick. So the stuff back here was easier to see. Where we'd get in, where we'd get out, all that good stuff. So in all reality, this is where we would be trading, and if it starts to go sideways and you're just unsure about the market, you don't have to be a part of it.
Yeah, just get out of it.
You don't have to be in the market at that point. So you can go look at a different pair and go look at something else. Like there's no requirement that you have to stay in a trade at all times, or in a pair at all times. But the one benefit is eventually you're going to have that breakout and you want to be a part of it, so it does pay to try to be in a trade at as much as possible, in a trade at any pair as much as possible.
Okay.
Just like that sell trade right here, we held on to it for, a ton of pips, 135, 185, as high as 268 or so. We had some good movement. And if we were to pull up a 1-day chart right here instead of a 240, we'd probably be able to see that this is a very easy wave to see, this downward move. So let's take from 6/7, so June 7th, until about June 20th in the days, and let's look at that. So AD USD. So June 6th. So back right here. So June 6th to June 20th. There's your downward move. It's a lot easier to see that. This little kick back up, was that even 23% here? So we could also, and this is why we could look at our barely sitting right on it. You'd have to call that judgment on your own if you take a buy there or not. Then it goes to a low, then it goes to a little bit lower low or similar low, and then it starts to go sideways for quite a while. But in this sideways, if we were looking at this and looking at getting out here, we could have gone to the indicators and said, okay, well, I did hit the 23.6, but I want to know something. Where's my TNTs at? So what I'm going to do is I'm going to go to analysis. I can go to green chart with my thick orange index. Here we are right here with that upward move on this June 6th from here all the way down to June 20th, which is right here. That's our downward move, and then all of a sudden it starts to kick back up. Well, where is this thick orange right here? So let me erase all these lines. And let's go back to this point right there and see where this index number is. Because if that is at 0, I pretty much would have stayed in this sell trade and not taken a buy trade. So let's go back, let's take a look at it. And it's at 0.00. So this TNT is saying, hey, we're kind of tapped out. We're kind of completely bought out with that. And if you notice, this thick orange is saying buy this whole time. Look at the buy cycle for this thick orange. From here to here, it was saying buy that whole time. Where was my buy? Besides this last little bit. So that whole time it was saying buy, 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 and I was going south. I was selling. But now I've completely tapped out with my buy, and all I've done is just a little bit right there, and I'm at 0. So yeah, I posted just a touch above that 23% line, so I may have taken that trade, but if I would have gone here and looked at this on a daily, it's like, no, I wouldn't have been in that trade at all. That 0 would have prevented me from getting into that trade. So it's just looking at little things like this, and if you notice, now we're in a sell with my thick orange. After the next day, I'm down, so I'm still in a buy with my dotted blue, but they change, and now I'm chomping right there. So I'm looking at a sells. Down we go, more sell. And now it's kind of flattening out. I'm saying buy right here with my dotted blue, and that's kind of what the response was. So I'm kind of slowing down. So I'm not getting as low of lows, and I've crossed this whole thing. I'm not all the way to the bottom of my thick orange, but I've moved a lot with that thick orange. So this is a lot to think about, a lot to take in, but you have a very long buying move on this thick orange, and there's no buying.
No green in there.
Yep. You have a very short sell right here, and there's a lot of red in there. So I look for the TNTs to kind of give me a confirmation of, do I really want to be in that? And I'm at 100% or 0% right here. I'm tapped out. Like, do I really want to go into that trade, being that I'm completely tapped out, and that the minors are leading the way and not the majors? I don't. I don't like that.
Yeah.
So that's what I look at.
Okay.
I have my 240. This little pushback up right in here, we would have seen on the day as, something that came up to the 23%. It didn't post above the 23%, just a hair above it, actually, on the day. So if we come back here and go back to a clean chart, this right here from top to bottom, we only posted seriously just a hair above it, right there. You see that?
Yep.
We're just above it. Right here, we're at 386. And with this line added to it, we're at 410. So what is that? 2.4 pips difference. That's it. 2.4 pips above the 23.6. So I'm not extremely confident about it, especially when I go back to my analysis, go back to my this, and I'm showing that I'm tapped out here with this thick orange. So I'm going to hide my chart drawings. I'm tapped out at 0, 0, 0.
Yeah.
Barely above it, tapped out at 0, 0, 0. I'm not going to take a trade there. That would hinder me from taking a trade. Taking that buy trade. Because again, I'm in a downward direction. So in all reality, back here, if I'm in a downward direction, my buy is going to be a lot smaller than my sell. That's why I take larger lot sizes when it's in the direction of the trade that I'm in. Does that make sense?
Yeah.
That's why I suggested over here, do we take a 0.2 or do we take a 0.4? And you said 0.2, so we went with a 0.2. But I said 0.4, and the reason being is, in a buy direction, if I'm in an upward trend, I want to be in a larger trade in those buys. If I'm in a downward trend, I want to be in a larger trade in my sells and smaller trades in my buys. So this one we wouldn't have as large. Plus I'm in a downward move. Do I really want to be in that? You have to ask a lot of those questions and figure it out. Because again, this is a chess game, and you're trying to think one or two moves, well, probably more like 2 to 4 moves down the road from what you're seeing. You want to be able to anticipate the market and adjust to what you're anticipating instead of reacting to the market. Because if you're reacting, the market is just playing with you. But if you're anticipating, and you're anticipating correctly, like we've shown multiple times here with the higher high, higher low, higher high, higher low, and now we got a lower low, so we should pick a lower high, we get the lower high, back down to a lower low, we get it, to a lower high, to a lower low. So now we should be moving up and out of this. Does that make sense?
Yeah, that makes sense.
So you really want to anticipate, and then validate it. But also you need to make sure that with your anticipation, you can adjust if you're incorrect. Because there's no way you're going to be correct all the time.
Yeah.
And if you can't adjust because you're holding on to something without proper stop losses in place, you're going to get in a lot of trouble.
I have 2 questions.
Yes, sir.
When you go to over here, you delete the Fibonacci.
Right click on your screen, go to Objects List. Click on that, and then go to the Fibo on your objects. So highlight that row. You can either click it, you don't have to check it. If you want to check it, now you can move it around, but if you don't check it, and all you've done is highlighted it, so it's blue, you can hit this delete button right here. Now it's gone.
Okay. me how to put it in. I didn't know how to get rid of it.
Gotcha. Yep.
And then one other thing.
Uh-huh.
Show me how to close half the trade again.
Okay. Let's just take a .02 trade.
Okay.
That way we can actually close it out. So we're in the Euro USD. Let's just take a sell. Here we are. So you want to right click on this order.
Okay.
And then you can go to either two options. You can hit close order or you can do modify or delete order. So what you're doing right now is the type of order you're trying to do is you're trying to modify this existing order. And modifying it means you can change the stop loss or the take profit. That's it. So we're not trying to, the type of task we're trying to do is not a modify. We're trying to do an execution of something right now. So
Is it easier to use close?
It's good to know either.
I'm sorry?
It's good to know either one.
Okay.
But in here we want to execute. So go to type instead of modify. We want to find the execute, market execution. Because we want to execute an order saying, hey, get rid of this. So go ahead and click on that. Now up in your volume, it's no longer in gray. So this is no longer gray, meaning you can actually change this volume to something different. So go ahead and click on that drop down, or you can type out 0.1. And now hit close, because if you look in the close, look in this yellow, it says close this number, sell 0.1 Euro USD by market. So you're closing out that 0.1. So go ahead and click on it. Now your 0.2 trade is no longer 0.2, it's 0.1. So you close out half your trade.
Okay. But, okay, now it didn't change it. Or is that any different?
Uh-huh.
Still says 0.2 there.
Where?
Right there.
That's for a new order. That has nothing to do with the existing order down here.
Okay.
So,
Alright.
let's go to a close order. That would just close it out. So, you want to go to market or modify order. Because you have single click options. Yep, you want to hit modify or delete, not the close order.
Well, we don't have an order now.
Yep, because I closed it out on accident.
Oh.
You okay?
Yeah, no, but I'm confused as to what you want me to do.
I don't want you to do anything.
Okay.
We're good.
Alright.
So yeah, so don't use close order unless you're going to close the order completely out. Modify or
Right.
delete it, and when you're in modify or delete, that's when you can change it to a market execution, and then you can close out a partial portion of that. And the smallest partial portion you can close out in capital city markets is 0.1 lots.
Okay.
All right. Any questions before we jump off the call?
Yeah, what's your address?
What's that?
What's your address?
938 Orchard Drive, Pleasant Grove. You still there?
What's the zip?
84062.
Okay. No, I guess I don't have any questions.
Okay. All right. So you have the phone numbers for the office.
I do.
You have the individual who brought you in. You can talk to him about things, him or her. You have the audits, the AITs, the SAT trades. You have Thursday night training. You have Wednesday night trainings. You have a lot of stuff that can help you, and you have all these videos that have been recorded. So in Slack, you can go back and watch any of these videos underneath yours. We've got all those. You got plenty of videos and information that you can go through and review.
One more thing.
Uh-huh.
What is the Day Trade Smart? They tell you on their webinars if you want. This must be some kind of a service you're selling. info@daytradesmart.com.
Yep. Day Trade Smart. So it's Hiram's company. So Hiram has a partnership within the company, and his is Day Trade Smart. And so there's a service you can pay for. It's I think it's $200 a month, and they will send you notifications for trades. If you want to take advantage of that, I would suggest going Wednesday nights for Hiram's. Hiram does a mastermind class.
Right, I've been there once or twice.
So go there and ask any of the students that are in there, saying, "Hey, are you paying for this subscription?" And then ask them what they think. So you try to get an unbiased opinion, and try to ask the question not very loudly so others can hear, because people, if they're in a group like that, they don't want to go against something.
Yeah.
They don't want to give real information. They just want to, yeah, it's great, it's wonderful. Nudge, nudge, wink, wink. So get a real honest opinion about it, and try to do it where it's kind of a private conversation. And say, hey, what do you think about it? Do you think it's worth my time? Do you think it's worth looking into? What are your thoughts on it? And step forward that way.
What's your opinion?
My opinion is it's a lot of scalping. So you've got to be very on top of. I mean, if your day is free and you don't have a lot going on for your day, it might work for you, because if you can be at the computer whenever those little notifications come across, you can jump into it. But you have to wait for the candle to post before you can actually take the trade, because they want you to verify the trade. So they'll tell you what they'll tell you what kind of a stop loss to look for, how many pips you're going to go for. They go for 3 to 5 pips. And that's it. They have a stop loss of 1 to 5 ratio. So for 3 pips, you're going to have a 15 pip stop loss. For a 5 pip, you're going to have a 25 pip stop loss. And that's it. And the percentage of win is about 25 or about 90% success plus 90+%. But for 5 wins, 1 loss will wipe that out. So it's a different type of trading, and if it's something that works for you, by all means, at least test it out for a month. As long as you really jump into it, because you have to really know what to look for. When those things come across, you have to understand the signals themselves. There's a lot of work to it if you're going to trade that way. That you have to do your homework beforehand. It's not just here, take this trade for 3 pips. It's no, validate this trade, and if it holds, then take it for 3 pips.
Sounds stressful to me.
You can ask people in that class though, and they can give you a bit more of an honest opinion about it.
Well, is that what they're streaming now? Is that class?
I think so.
Okay. Well, they usually have that class. Oh, wait a minute. They had that class, and they had another class next door.
Mm-hmm. Yep, they have the advanced training class. They have the Trader Light class, and they also have the introductory class.
Okay, the Trader Light was the one next door.
Uh-huh.
Okay. Okay, yeah, I got a lot of stuff here to look at, so.
Nice. Well, Richard, if you have any questions, I don't mind responding to any questions you have. If it comes to kind of how I was showing you different things, if you need to, by all means, text. I like to have my students keep me in the loop about how they're doing. If you need anything more, I know the company does additional sessions. You can ask them, if you could get help with that. Maybe I'm not the right coach for you to have the next 5 sessions with. If you don't want, maybe I am. It's completely up to you. Some students, they like to have what they're learning in more depth, so they like to go with the extra 5 weeks or the extra 5 sessions. Some students, they like to try something different. I'm not offended at all if you do whatever you need to be successful. That's the whole point. Whatever it's going to take for you to be successful, if that's the mastermind thing with Hiram, that's awesome. If it's a different coach for 5 more sessions, that's awesome. If it's just plugging into the at the AIT, that's awesome. Whatever it works best for you.
Okay, well, I certainly appreciate what you've done.
Yeah, not a problem. And again, if you have any questions, by all means, you can reach out to me through text or give me a call, and I'll be available as soon as I possibly can. I respond to all my students. It might, be in the evening, but I'll respond regardless.
Okay, very good. I appreciate that.
You're welcome, Richard. We'll talk to you soon, most likely.
Okay, have a good day.
You too. Bye.